Today, I'm going to share with you 3 cheap dividend funds that I'm buying to not only increase my income to over $183,000 per year, but to also increase our performance as well. I'm living the fire lifestyle here at this channel, and so can you. Email me for my e-guides at akintodd48@gmail.com if you're interested in doing the same. As you know, for every $1 you put in your account, you get $4 of purchasing power. So I have about $1 million of purchasing power here that I use at my disposal, and I just use a fraction of this to get ahead. All the greats that I know of use debt to get ahead. My performance and value shows that I'm up 1.7% for the year, 1.76, and the S&P is beating us. But after today's gains of about $5,000, we'll be beating the S&P tomorrow, I think, and then also when we get our dividends for Cornerstone, which are coming at the end of the month, we'll be outperforming, I think, even more from that point. So not only are we getting days gains here, but we're getting dividends as well, okay? You know, getting over 100,000 per year in dividends is nice, but to also get performance with the market is one of the things that I take pride in, okay? Because I remember back in the day when I started out investing, I was getting a lot of dividends, like with AMZA, for example, and PFFA, but I wasn't getting a lot of participation with the market. Now when tech is going crazy and the market's going crazy, I can get participation just as much as I would be if I was in it for growth, but I'm also getting these dividends. But there's a secret to doing this. See, today, for example, I'm up 2%, well, 1% each in Cornerstone. So this is about $2,000 to $3,000, okay? So most of my gains are coming from Cornerstone today, even though the market is sort of flat. If you look above, the Dow's up 0.15, the NASDAQ 0.64, and the S&P is up 0.32. So we're at 0.71, and that's because I used some margin, okay? This 100,000 that you see here, 133,000 that you see here below, it's low interest debt. I've negotiated it down twice to where it's around 6%. Many of my clients who bought my e-guides have done the same. When you buy my e-guides, you get free access to the Discord chat room for life and my phone number for life, but only until 1,000 members is reached in Discord, and we're approaching that number fast. So many of my clients have negotiated their rates down, and so can you. Anyone can do this. Anyone can use margin. When my dividends of over $183,000 per year come in, then my margin debt will be paid off. I'll be at plus $50,000 in cash, and my account will go from $499 to, let's say, let's call it $500,000. It'll be at $680 roughly, if all things are equal, by the end of the year. So then I'll be left with all these dividend paying assets to myself. Okay, they pay monthly cash flow for life, and they qualify to banks for loans. That's how I live the fire lifestyle, which is financially independent, retire early. I'm 37 in case you're wondering, and I've been doing this approach for about 5 years. I've been investing for 20 years. I have a degree in finance, but none of that ever helped me, okay? What helped me was qualifying income so that I could get houses and cars. Okay, day trading never helped. I thought it was, but it never did. It was just an illusion. And now I just found out you need dividends for qualifying income. But if you can use margin like I use, this margin purchasing power, which everyone has granted to them, then you don't need to worry about showing up on credit checks. When you get your credit pulled by the banks, they won't see margin debt. So it's good debt. It's getting interest on it. So I just keep collecting these dividends on my margin, and then the dividends pay back my margin. The key, again, is using, let's say, a fund like Cornerstone, which is okay, I have 3 funds I'm sharing with you today, 3 funds I'm buying, and I'll get to the 2 later. The first fund that I'm buying, I'm not buying today, but I'll be buying through the drip, is Cornerstone at the end of the month, because Cornerstone has a 21% dividend, and it drips it down at the NAV, okay? So Cornerstone, it's a 4-star fund. It beats the S&P over the last 10 years. It has a 21% dividend, and it drips that dividend down at the NAV. So if we go to Cornerstone's net asset value here, you can see that it is currently around 684. So the premium here is 4% in CLM. So you're getting a premium here, and I think that's why it's cheap. Okay, it's a small premium. Usually the premiums average 20 to 30% in Cornerstone, but you have to play Cornerstone properly. You have to time it around its rights offerings. That's why the chart goes down. You have to factor back in dividends and drips, and then you have to time it around its rights offerings, and that's what my Volume 4 e-guide instructs you on how to do. Also, when you buy my e-guide, you get free access to the Discord chat room, which I already mentioned, but we alert you of the Cornerstone rights offering announcement there in Discord. So you can follow many channels in Discord, okay? You can follow my portfolio there when I'm not making videos on YouTube. You can, well, we have a Yieldmax channel, we have a Bitcoin channel, but we have a Cornerstone RO section where not only do we discuss Cornerstone and close-end funds like it each day, but we have the rights offering announcement there. Okay, so Cornerstone, again, time this fund around its rights offering, turn on that special drip because it's dripping down at the NAV. Okay, it follows the indexes, and that's why I'm getting my performance. If I get margin on top of the index performance, then I'm going to increase my performance further because the margin is just like adding fuel to the fire. So again, Cornerstone is indexed, the NAV is indexed, okay? It's tied to the S&P, and that's how I'm getting ahead. The second fund that I bought today was USA, okay? If we go to a chart of USA, you'll see that it looks similar to Cornerstone. Many of these closed-end funds look very cheap, okay? So USA, here it is, it pulled back. It's up 0.65% today. Look at it on a chart. It has about a 9 to 10% dividend, but the key to USA is it's one of my go-to plays. It's indexed, okay? So it tracks the market, and it had a pullback here. So this is when I use my entry points to get into funds like USA. We're also on the 20-day moving average, the orange line. If you need help understanding charts, that's in my Volume 2 e-guide. And also on the RSI, we've come back from being overbought. Now we're right there in the middle. We've taken a nice fresh breather, and it looks like we could resume this uptrend if the market resumes its uptrend. And as you can see, USA was higher. It used to be in the 9s, so there's a chance it could get back there. Plus, it's getting above the 200-day moving average, and that's bullish. If we can hold that, that would be nice. Closed-end funds have had a nice pullback. I wouldn't say nice, but they've had almost a worrisome pullback. Since 2023, they've all been down. Look at GOF. Okay, this is another closed-end fund that it's not what I'm buying today. It's not really indexed. It has some equities. It's a highly rated fund, GOF, but on a 1-year chart, you can see that it looks similar. It's has its highs and lows, and it's not anywhere near its old highs, as you can see there, just like USA. And then obviously, let me just go check on Cornerstone for you because we were just looking at Cornerstone CRF. Let's go to that chart, and you'll see that it's looking similar. It's having these little highs and lows, but in this little tiny range that's a lower high. This range is in a lower high than these old highs here. Okay, and we never had a rights offering during this time. Okay, so it's not like you can say that that was from the rights offering. That was just from all closed-end funds taking a dive during the month of October last year. And so USA, again, it's looking cheap to me, and if it can get above those 200-day moving averages. I think that it's above it on a 1-year, but on a max time frame, if we can get above that 200-day moving average, which we're starting to on a max, and on a 10-year time frame, okay, we're all the moving averages are converging. So to me, USA is a nice go-to play when you're trying to get more index exposure. And again, it's getting above all moving averages, which can be a positive sign. So USA, it has about a 9 to 10% dividend. Typically, maybe it's around 8. So. It's going to help us get these days gains, okay? About 5,000 that we're up today. A lot of that, again, is Cornerstone. But if you look down at USA, you'll see that it's up about 0.65%, 0.66. And I bought the position. I only started with 3,000, but all these positions added up give you a good day's gain amount. Okay, the next fund that I'm buying is ASG. Okay, ASG is its sister fund, okay? USA, I always go to these plays. These are like my go-to plays. I would buy EOS, because that's a highly rated fund, and it has a nice dividend too. It's tech-related, EOS and STK, but I have Fangu for that, okay? And I'll explain how I play Fangu in 1 second if I can remember that. So here it is. Here's ASG. It's really cheap, okay? It trades more like with small cap growth and Russell growth, but it has some nice names in the fund, and here it is. It's really cheap still. And so we're at the low end of the range here historically in 2018 and 2020, and now we're down here again in 2023. So unless something's wrong with these closed-end funds, which please comment in the section below if you can, tell me what's wrong with all these closed-end funds. Since I got into investing and dividend investing, closed-end funds are my favorite kinds of plays, okay? Because, not only do they give you some dividends, they give you the upward left to right movement that you need, okay, to help compensate from Defiance lag, okay? Because Defiance, that's how we get our straight-up income. It's just dividends only, no growth. But look, we're flat in these funds, Defiance, okay, QQQY, JEPY, and IWMY. Look, we're actually up nicely in these, and we've collected dividends, okay, every month since these funds have been out, since their inception. We've collected at least, 10 to 20,000 in dividends. So these Defiance funds are really working, but I need my upward left to right movement, and that's why I use Cornerstone for most of that, okay? Cornerstone, again, if you time this fund around its rights offerings, you can get 50% gains in a year, okay? I've had them. In 2021, I had a 100% gain in Cornerstone. I had, the premiums were up to 40 and 50%. The premiums, plus you're getting the 20% dividend and you're dripping it down at the NAV. Okay, so when those premiums rise, you're just getting more money at the NAV every month. It's free money and it's indexed. Why wouldn't you look into that? But please select the proper broker, because not every broker has the special drip for Cornerstone. On Discord, if you want to know which brokers have that, we have a brokerage specifics channel. Okay. So Defiance, we need the growth, and Defiance also has 50% maintenance, okay? 50%, so I can't put too much in Defiance, but Cornerstone has 30% maintenance. So does USA, so does ASG. They are 30% maintenance, okay? If you need help understanding maintenance, that's in my Volume 3 Margin E-Guide. So even if you're not using margin, you need to keep maintenance in mind, because if you're trying to live freely out of your brokerage account, then you can't have 50% maintenance and everything, because then that sucks up 50% of your equity, okay? You have to be able to withdraw out of your account, okay, and withstand market correction. So my available withdrawal of about 211, this means that I can withstand over 20% correction in the market, and I can withdraw money on top of this. But I'm not worried about corrections ever, because my dividends pay back my debt in less than a year, so my leverage goes away, my risk goes away, and then I'm just left with index-based funds that go down by the amount of the indexes, not by the amount of stock. That's why I keep Yieldmax at small amounts. See, I have Defiance as a larger holding, the three Defiance funds. These are my larger holdings below Cornerstone. Plus, Cornerstone is proven. It's been around since the 70s. Defiance is a new fund. So is Yieldmax. Yieldmax is a relatively new group of funds, and they're basically stock related. Okay, we have the YMAX and YMAG funds, but I'm not putting too much into those yet, because they have some holdings within them that I think are not good for total diversification. You can see my past videos on that. But here we go. So here are my Yieldmax funds: AMDY, NVIDIA, ARKZ. Oh, that's actually Bitcoin. DSO for Disney. I keep small amounts in these, $1,500 to $2,000, because they are stock based and they have headline risk. They can fall and theoretically go to zero, even though the dividends will still cash flow them and we don't lose as long as we hold the position. But with these other funds like a Coney or a Square, I have more money in them because they have a much larger dividend to compensate me from the risk, or they are another asset class like a Bitcoin that I want a certain amount of exposure to. 3 to 5% in your portfolio should be what you have for Bitcoin exposure, professionals say. So also I have my sold puts. I sell puts down here. I have about 30 to 50 grand a year I net in these sold premiums on these leaps, and they give me more index exposure, like 145. Today we're up in the small caps, TNA. So if you add all these up over time, see Bitcoin, we're down, but this is just what diversification does for you. Also, Litecoin was up nicely. We've been trimming into that. The losses that you see here, the 400, I just took losses in OARC on purpose. When I sell from shares, like let's say OARC today, I sold a little bit on the strength. I sell from the losses so I don't have to pay taxes, and then I bought more FEPI. All right, so I use FEPI, all right, because this is the last point I wanted to say. One of my viewers was asking, are we in a bubble for technology stocks? Okay, and my answer to that is always, I think no, because we never know anything. I don't have a crystal ball, but when you look at the revenues, of these companies, they're in the billions, and then when you look at the net income of those revenues, then they're also in the billions. They're staggering numbers, and they're also software as a service numbers. Many of these revenue numbers are reoccurring. It's not like you go out and buy a PC or a TV, and then you're not going to buy for a few years, and then there's a big cycle there, and there's a bunch of highs and lows within that cycle. To me, a lot of these technology companies have reoccurring revenue, software as a service. They have billions in net income, tons of free cash flow. It's not like the old days, like the .com days. So that's why they lead the S&P and the market caps, and that's why I own so much of those tech stocks myself. And funds like Fango, okay, this is where I get most of my tech exposure. This is like having ×3 of a single, because it's a triple. So instead of having 30K in a QQQ, I'll have 10K in a Fango. This is how I save a lot of capital. I lowered my margin by 20,000 by doing that. I lower my risk by doing that. I protect it with FANG-D, a small amount of FANG-D, so that FANG-D can't hurt me if we go up. But if we go down, there will be some recourse there, and eventually I would actually be even in my position if tech really crashed. So I don't really care what anything does. My dividends cash flow me over time, and then I'm also hedged into where if I lose, my hedges win, and also my dividends, again, just pay back my margin. So either way, we don't lose because our margin gets paid back regardless of what the market does. We don't lose regardless of what stock prices do, because we'll cash flow that investment over time. And then it's hard to lose when you're indexed, okay? And everything is tied to the indexes, including a Fangu, including me selling these options. So those are the 3 funds I'm buying today, okay? ASG, USA, and I'll be buying more Cornerstone at the end of the month, okay? When we drip those shares at the end of the month, it's going to do a nice dollar cost average for me. And that's how I'm going to do my buying of that fund, because all closed-end funds, in my opinion, look cheap. So if you need help living the FIRE lifestyle, email me for my e-guides at akintodd48@gmail.com. When you buy my e-guides, you get free access to the Discord chat room for life and my phone number for life, but only up until 1,000 members is reached in Discord. So please keep this in mind. Also, watch out for spam. We have spam in the YouTube comments. We have spam in the Discord. We have impersonators. Yieldmax now has an impersonator. I was on their Twitter page today, so watch out for spam. The only thing I sell are my e-guides, okay? The e-guides, they look something like this. When you email me in Gmail, it'll say something like, "Dear your name, okay? Here's more information below on my e-guides," okay? And I'll have a little listing of what the prices cost, and then I'll have my ways that you can pay for it below, okay? Whether it's Venmo or PayPal. I even accept Zelle and Cash App. So again, if you like the video, click like or subscribe, and I'll talk to you soon. Thanks.